We are honored to have in our midst Mr. T. Rabi Sankar, the Deputy Governor of Reserve Bank of India. Now, he is a career central banker who joined a Reserve Bank in 1990 and has worked in various capacities until he assumed the office of the Deputy Governor in May of 2021. His current areas of responsibilities include public debt management, forex reserves management, payment systems, IT infrastructure, currency management, as well as foreign exchange management. He's also the chairman of Reserve Bank of India's currency notes printing press. Without any ado, I request Mr. Ravi Shankar to come on stage and deliver a special address on the theme, The Road Ahead for RBI and Fintech. Thank you.
Uh, we have virtually the who's who of the fintech industry here. I've heard 4 of them speak. And like whenever I come to such gatherings and hear them speak, I learn something new. Today I learned that in a purely capitalistic enterprise, entrepreneurship, doing businesses, learned from Samir that you can actually also have socialistic strategies. I think the purpose of my talk would be served if I can learn to talk and think a little bit more like you guys. And I hope if you can learn to talk and think a little bit more like us. So I've heard the first panel that I was here for talk about regulation, what they think of regulation, very briefly, and it isn't any different from what we think, which is heartening to know. So, coming to the formal speech, I'm delighted to be present here at the India Startup Conclave. All of you represent the best of the Indian entrepreneurial spirit, and it is my privilege to be addressing this gathering. India is one of the fastest growing large economies today. Our population is young and adequately skilled. The policy environment is supportive of private enterprise. Our capital markets are capable of funding good business ideas. The Indian stack is the envy of the world. All these factors have allowed many startups to bloom, thereby creating a robust Indian startup ecosystem. Fintech enterprises comprise a significant part of this ecosystem. Now, fintechs, as all of you know, are transferring financial services across sectors, including credit, payment systems, wealth management, investment advice, insurance, financial inclusion, and even financial sector supervision. The COVID-19 pandemic has given a very strong boost to digitization. The fusion of technology and finance played a crucial role by facilitating smooth loan disbursals, robust 24/7 payment systems, uninterrupted access to financial services, and direct benefit transfers. New and innovative technologies brought by fintechs are helping in driving down cost, refocusing products and services, and improving customer reach and experience. The ongoing developments, innovations, and emergence of new technologies will significantly shape the trends in the financial world of tomorrow. As a principal regulator of the financial system and with a mandate for ensuring financial stability, the Reserve Bank of India is closely watching the fast evolving world of fintechs. In fact, to provide necessary support to the nascent sector, more than a year ago, we had set up a fintech department to give dedicated focus to this sector and to foster innovation to the extent we can. I will take this opportunity today to share with you how we in the Reserve Bank of India view the changes in the financial services space caused by absorption of new and innovative technologies and the resulting issues like regulatory level playing field, consumer protection, innovation, and central bank digital currencies. We believe that the fintech sector will play a crucial role in achieving objectives of greater financial inclusion, cost and time efficiency, and so we play the role of someone who encourages the development of the sector. One way of looking at fintech innovation is in terms of three variables: time, access, and data. Many innovations, in essence, enable saving time, that is, transactions to be done with speed. For example, the fast payment systems like UPI. The second element of innovation is about access, that is, they take services to people who are not exposed to financial services, promoting inclusion in both senses, in the sense of equity, in the sense of formalization of economic activity. The third element of innovation is data, using available data to create new processes and generating further data that can incentivize further innovation. Think of cash flow based lending or using tax data for credit assessment. Increased penetration of internet, processing speed, and data availability has given a huge boost to financial innovation in the last decade or so. These three elements, time, access, and data, are driving innovation in the fintech space. While these innovations are paradigmatic changes, financial products remain exactly what they are. There are still deposits, there is still credit or lending, and there are still investments, personal finances, and so forth. These financial products have been in existence well before the fintech revolution happened and will continue to remain as products. What has changed is the delivery of these products, channels of delivery, speed of delivery, and price of these products through efficiency gains. We often hear that these changes are disruptive. When we talk of disruption, we are not talking of new products, but basically talking of disruption to the existing institutions and processes. Conceptually, therefore, a fintech entity providing characteristic banking services, and this holds for whether it's insurance services or whether it's for mutual funds or whatever, or investment advice. So a fintech entity providing characteristic banking service like loans or payments, it pretty much doing a banking activity. It just looks different. Such entities may not require a banking license, but they need to be regulated similar to how such activities are regulated in a bank. Now, financial services, as most of you would know, are among the most regulated industries, if it is not the most regulated industry, for good reasons as well. They are key to growth and development. They involve the use of public money, and they are the conduit through which financial integrity is enforced. Fintech firms should therefore be subject to similar regulatory oversight. Regulation might catch up in responding to the speed, regulation might play catch up in responding to the speed and complexity of changing processes. Eventually, however, regulatory gaps will get filled and uniformity in regulation will be ensured. The experience of the last couple of years, whether it's in the payment space or in the lending space, is something that I have in the back of mind when I say this. Fintech firms would therefore be more stable as a long-term business proposition if business strategies include regulatory compliance as a basic requirement. Innovation should not be about exploiting regulatory arbitrage. The usual complaints, one hears, for example, when authorities globally are clamping down on cryptocurrencies now, for example, that innovation is being stifled. This sort of an argument is not really valid. As someone from the SEC recently said, we are not here to stifle innovation, we are here to stifle fraud. That's an extreme statement in the context of that particular case he was talking about, but fundamentally the point is made. Undoubtedly, we see a critical role for the fintech ecosystem to act as a force multiplier as we seek to achieve our goals of financial inclusion, digitalization, and customer protection. RBI has taken several steps to create a nurturing environment to foster innovation. In 2016, we issued guidelines for account aggregators. In 2017, peer-to-peer lending guidelines were issued, even when the sector was in a fairly nascent stage. The regulatory sandbox framework released by the Reserve Bank in August 2019 was intended for fostering innovation. The response to the regulatory sandbox has been encouraging, to say the least. An interoperable regulatory sandbox to facilitate testing of hybrid products or services falling within the regulatory ambit of more than one regulator is also in place. In November 21, the Reserve Bank launched the first global hackathon, Harbinger, with the theme Smarter Digital Payments. The hackathon received encouraging response with 363 proposals submitted by teams from within India and from 22 other countries across the globe. As a sequel, we have also announced the second hackathon with the theme Inclusive Digital Services. In 2021, the Reserve Bank established its own innovation hub, the Reserve Bank of India Reserve Bank Innovation Hub here in Bengaluru, to support creation of an innovation ecosystem through collaboration among financial institutions, the technology industry, and academia. RBI and the Innovation Hub have commenced pilots in many states, Madhya Pradesh, Tamil Nadu, UP, Maharashtra, for fully digitalized Kisan credit card loans, which is being disbursed in minutes. Similarly, a pilot on fully digital dairy loan-based milk pouring data has commenced in Gujarat. So RBI, the point that I'm trying to make is that all these initiatives are basically to show that RBI plays as much the role of a regulator as it does the role of developing the fintech ecosystem. RBI has launched the rupee central bank digital currency. The pilot test is going on. Many countries are looking to us to learn from our experience. As a matter of fact, we too are looking to learn from our experience. I will not talk much about this because I think it can be covered in the Q&A that follows. But then, I believe that, like in the case of UPI, we will witness a significant change in the innovation cycle for tokenized form of money in the days to come. The Reserve Bank of India is mindful of the fact that innovation has potential to make finance more inclusive and the financial system more competitive and healthier, as well as making the regulation more effective and efficient. While innovation is crucial, it is necessary for these innovations to be responsible and even beneficial if they address actual changes faced by people in their day-to-day lives. It is also important for these innovations to be scalable and interoperable, allowing for expansion and providing advantages to a wider network of participants. Bearing these principles in mind, I would urge fintech players to contribute to development of the sustainability of the sector and ensure responsible digital innovations. While focus on short-term valuation gains may not be avoidable for businesses, creating long-term value should be the basic goal. Fintech companies can prioritize several key areas like improving customer protection, enhancing cybersecurity and resilience, effectively managing financial integrity, and robust data protections. All these will go a long way in adding sustainability to the long-term business potential. It is also essential that every player in the fintech industry devotes sufficient attention to governance, business conduct, compliance, and risk mitigation frameworks, as these are also aspects vital for long-term sustainability. I will conclude by emphasizing that it is crucial for regulators, the fintech industry, and incumbent institutions to engage in open and meaningful dialogue. This dialogue is necessary to establish a shared understanding of fintech activities, business models, and the rationale behind regulatory measures. Such collaboration among stakeholders will play a key role in ensuring effective regulation and fostering a conducive environment for fintech innovation. Thank you all for your attention and have a fruitful convention.
Thank you so much for those
Thank you.
initial comments. Very insightful, sir, indeed. Just to follow it up from your speech, you said a very important point that fintechs need to be regulated at par with banks, uniformity in regulation and etc. Could you please throw some light on, are you encouraging fintechs to convert to banks, or will there be separate regulations in terms of capital or in areas they can operate?
What I meant when I said that there have to be, there has to be uniform regulation,
Yeah.
is basically the principle of similar activity, similar regulation.
Yes.
You could do you could provide a banking service without actually being a bank. So you may not be regulated in the sense of, requiring a license or having capital requirements and so on. Certainly not as closely as banks are. But the activity itself, whether it's a payment activity or whether it's a lending activity, the regulation must ensure that there is a level playing field between entities which provide similar activity, banks,
Yes.
and fintech entities which provide the same activity, but differently. Like I said, the product is essentially the same. The delivery is different. How they look is different. So what I meant was that. Now, eventually, going forward, banking licenses are open. They're continuously, sort of on tap.
Yeah.
So any entity which wants to be a banking license can apply. If it qualifies, it can become a bank.
Sure.
So it is not like, one has to, as a regulatory strategy, promote entities to become banks. But if someone wants to become a bank, has experience in that sector, a fintech entity, it's open to apply.
Yeah. So, what is your current assessment in terms of fintech's operations, in the areas that typically a bank operates? Are there any concerns at this point on the part of regulator? Is there anything that worries you at this point?
I wouldn't really put it as as a concern.
Yeah.
We understand in the Reserve Bank that as much as we need to understand how fintech is evolving,
Yes.
what the technologies are, and what the business strategies are, and how innovators or promoters are thinking, we need to understand that. It is therefore reasonable to expect that these innovators, these young innovators, most of them are so young, young innovators, their focus is on the innovation aspect of it. Their focus is not really, on the regulation aspect of it. So it will take some time for the ecosystem to catch on, to appreciate, and to imbibe the basic regulatory requirements that covers conduct or customer protection or governance issues.
Right.
We understand that. We understand that that process will go on. And we also understand that you cannot, we have to draw that fine balance where the sector is allowed a free, free space to develop. But at the same time, when we find that something needs to be corrected, we could step in and correct it. A simple thing is two-factor authentication. It, involves additional, steps, processes, investments, and so on. But we started it, more than a decade back. Initially, there was objection, but now almost everyone accepts that it is something that differentiates India's payment systems from those of the rest of the world. So that is essentially what it is. The recent guidelines on, deposit loan, the loan guarantees, or
Yes.
or all those are similar in nature, or tokenization in payments are similar sort of things. So we intervene, we time our intervention so that the industry is allowed to grow,
Yeah.
but intervene where required.
Let me be a bit more specific. Pardon for following up on the same thing. Is the RBI working on a revised set of regulations to govern fintechs?
We are working on fintech regulation. What would be specific to fintech entities and the fintech ecosystem? Like I said, we are also learning, as much as they are learning. This process is on. But that regulation of fintech space we are talking about is more developmental in nature.
Okay.
Because the other governance, conduct, etc. regulations are well established. Similar activity, you will be regulated similarly.
Yeah.
How to, put in regulatory intervention, whether it is required, how much is required, what is required, so that there is adequate space for the,
Yes.
for the industry to grow is something we are working on.
Yeah. Is it fair to expect the revised fintech regulations you mentioned that you are working on to come this year? Is it a fair expectation? I know it's
There
not.
are no revised because there are no fintech regulations
No,
right now.
I mean, what I mean
So,
is that, yeah, different.
yes, we are talking to the industry. We'll,
Yeah.
we'll have to, first of all, find out, do we need to do it? What aspects do we need to
Yeah.
do it? So that's going on. So I can't give a, timeline on it. But yes, but whenever we will do it, it will be in close coordination and consultation with the industry.
Okay. On one hand, again, this is something that you have been speaking on across different platforms all these recent months, particularly. You encourage innovation for fintechs to, tap the unbanked areas, particularly where banks are yet to reach. But on other hand, you have drawn a very clear line, like you said in the speech, that entities that are outside the purview of banking regulations can't act and operate like banks. So how do one find a balance? Is RBI open to give fintechs a larger role, a bigger play in the immediate future?
No, I do not think, that's exactly the point of what we are doing in the regulatory space.
Yeah.
Again, I'll come back to the basic principle. Similar activity, similar regulation.
Yeah.
There could be in the initial phase of the growth or evolution of a sector, regulatory gaps or regulatory arbitrages, but that have to be plugged for, for a level playing field. We are essentially saying that. We are not really saying that they have to be regulated separately.
Yeah.
It is whatever regulation applies to that activity will apply when, when a fintech entity is doing it.
Right. One another aspect which you mentioned partly in your comments is that on FLDG. Earlier the Reserve Bank banned FLDG. You didn't want this in the market, and later you allowed a 5% FLDG. The feedback that as I interact with the stakeholders is that some feel that this is too less to operate. Perhaps a 10% or 15% would be will let them grow in a much healthy manner. Also, there are demands that the facility should be extended to co-lending arrangements. So, what is the long-term thinking within the Reserve Bank in terms of FLDG? Will you be tweaking the norms, increasing the limit?
A regulation is not like enacting a law, right? We do a regulation after consultations.
Yeah.
And then we get feedback on the regulation, we evaluate them, and regulation, evolves. As the market evolves, regulation evolves. So, we cannot say, no forever to anything. Yes. So everything will be considered. As far as why we fixed a 5% limit, everything that we do, this is not an area that, that comes under me, but broadly everything that we do is backed by some assessment, some analysis of data. We would have presumably looked at data of, delinquencies in similar types of loan covered by fintech entities, personal loans or small SME loans and so on. We would have seen the level of delinquency, the level of NPS there. And I understand it is somewhere around this percentage. So we thought that would be a stable percentage in the long run.
So coming to CBDC, the pilots are on. Could you give us some insights about what are the key learnings at this point from the CBDC retail and wholesale pilots, and when do we expect a large-scale rollout?
The key learning for me so far is that that we have to reach a particular threshold of users before we can actually learn anything. Okay. You see, what we are trying to learn. You would have heard me say that we are not particularly interested in rolling it out, like for example, UPI did at a very large scale.
Yeah.
Because unlike payment instruments, this is money, this is a currency. It is an entirely different thing. It has a substantial impact on other forms of money, like bank deposits. It has an impact on customer behavior, and therefore it has an impact on monetary policy, and eventually it will all get into, feed into financial stability. We want to go in a measured, calibrated manner, learning along the way. But we weren't seeing enough transactions, so we decided that the next step that we take was look for a threshold level of customers. We targeted 1 million customers by June. We have crossed that now. I think we have about 1.3 million customers, about 300,000 merchants in there. But the merchant issue doesn't matter, because the second thing we are trying to target is interoperability with UPI.
Yes.
So anyone with a UPI QR, that QR can be used. If I have a CBDC, I go to a merchant, it has one QR, I just scan it. If that merchant has a CBDC account, payment will go there. If it doesn't, payment will go to his bank account through UPI.
So is there a time frame as such that we will see that?
It has already started. I think about 3 or 4 banks have already put in place a system. A few, or I think about 9 banks have put in place a system. Yeah. A few others, 3 or 4 others are trying that out. So once this happens, I expect that we will see more traction in terms of transactions. That is essential for us to, understand and learn. And the rest of the world is actually, watching that to understand and learn its behavior and bank deposits, for
But
example.
simultaneously, you have been highlighting that there are risks of frauds and irregularities, cyber crimes, etc. in e-transactions. So are we at a stage to say that we can handle?
Just today, I read that there was an income tax raid. They recovered 30 crores, and 1 crore of that was fake currencies. There is risk of fraud in every sphere of life. Yeah. Digital, yes, it is there. But, whether it's CBDC, whether it's UPI, in everything it is there. We will have to develop systems to minimize it in the interest of customer protection.
Right. Recently, you said the RBI issued a statement saying that most part of the 2,000 rupee note is returned to the banking system. So, will you be able to give any latest updates on that? And also, is RBI focusing on printing more smaller denomination notes, because the 2,000 notes, the big value notes, are now out of the system?
Yeah, that's payments in a way. So I guess it's all right. No, we would give data periodically, and we would, give that in a formal manner on our website. The data as of June 30, you would be aware of that, is roughly about 76% of the amount of 3.56 lakh crores or trillions, which was there on the 19th of May, has come up. The process is continuing. So we expect this process to be probably complete or very close to complete. You'll never get 100%, but close to the deadline that we have kept. Our objective was that the deadline should be such that there is no that there is no inconvenience to people who are holding it. Adequate time is given, the process is smooth. Provide other denomination if they want to exchange. On the next question, is that we had already prepared and provided the necessary currencies, with, expecting that some of it would eventually get converted to other currencies. This is a function of demand. Anyone wants to withdraw from any bank can withdraw. Even today, our job is to provide sufficient supply to the bank. We take care of that regularly.
With respect to the promotion of rupee, something the RBI has been focusing so much in the recent years, in July 2022, if I'm not mistaken, you issued the detailed guidelines on cross-border trade transactions in rupee. So how is the progress so far? What is the response? And ultimately, I know it's early to say, but when do we see rupee as a global currency? Is there any?
That again is not payments, but yeah, in a sense, probably even that is. No, I think rupee as a global currency is not something we are thinking of, not something we are targeting at this stage. Okay. You see, I presume when you say a global currency, you mean a currency which is used by a large number of countries. Yes. Currently, there are only a few. There are only a handful of those currency, and basically dollar dominates there. So to become a global currency depends on a lot of things. Depends on your economic size of your economy, depends on your external sector, and depends on a lot of other things. So that's not what we are targeting. What we are saying, what we are planning when we are saying rupee has to be international, follows from this understanding of ours, that we believe that a global financial system dependent on 1 or 2 or 3 currencies largely is inherently more unstable than a global financial system where a large number of currencies, 50 or 100 currency, are used more or less similarly. a lot of debt crisis, currency crisis that you would see happens because there is a dependence on one or two or three currencies. Those, the frequency of those could reduce if more currencies are used. That is the principle behind our decision. What we are trying to do now at this stage is rupee must be used in our global transactions, trade transactions, capital account transactions, as much as possible. We are we're making bilateral efforts. We are making multilateral efforts in trade groupings to promote that. Now, this is a long-drawn process. This not only requires other countries to agree with you, this also requires that exporters, importers, and other economic agents who do cross-border transactions have to adjust to this. An exporter has to adjust to the fact that it won't earn in dollars, but in rupees. Yeah. So, that would take some time.
One final question when coming to the end of this chat is on crypto. Time and again, you have voiced your concerns on not only about people trading in crypto without any fundamental backing, but also about lack of data on crypto, which makes even more difficult for the regulator and other stakeholders ascertain. So what is the status? What is the current thought process with respect to crypto, with respect to data in central bank?
I haven't changed one bit, from what it was earlier. Yeah. Our concerns is not on people trading cryptos. I mean, just to be very sure, our concerns are about the product itself. Yeah. Unbacked cryptocurrencies, we don't believe is anything that answers to anything which is a financial asset. Or even a commodity. Crypto assets backed by other currencies, stable coins, answer that definition, and they might not be risky for countries whose currency is pegged to them. For example, stable coins pegged to dollar is not a risk for US, but for stable currencies pegged to other currencies in emerging market economies pose very serious financial stability, capital management, and monetary policy risks. You see, the fundamental point is this. The fundamental point is that somewhere, academics, big policymakers, have to first of all make a case that there is a need to have private currencies. That has not been made, as far as I can understand so far. Okay. Then they have to make the case that there is a need in an economy to have multiple private currencies. You have 20,000 cryptocurrencies. Now, has that case been made? If it hasn't been made, we have to be very careful in seeing that it's an innovation, let it play out, and then we will see. Yeah. Take stable coins, for example. If we allow stable coins linked to the dollar in India, among other things, all the risks I told you, the first thing that will happen is that the seigniorage income that the government of India earns today flows to private entities in developed economies. Now, that would be a continuous outflow of wealth from emerging economies to developed economies. Now, that's not something that people have even thought of or discussed publicly. These issues have to be debated, answers obtained before we can actually go over to thinking about them as viable instruments.
Thank you so much, Deputy Governor, for that very insightful comments. Thank you so much for your time.
Thank you.